Hello, everybody. Welcome to the Fundamental Analysis webinar this evening. My name is Troy. I'll be presenting this evening. Before we get going, just give me a quick okay in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Looks like we're good to go. All right, so similar to last week, we've got a particular story fundamentally that's driving the markets. It's pretty easy to follow. It's pretty simple to plan out on the chart. So without any delay, let's go ahead and take a look at things. Always keep in mind all investments have risk. That also includes trading Forex, CFDs, spread betting, and options. No one position is guaranteed to profit. If you want to read the full risk disclosure statement, you can find it on avatrade.com. Also, keep in mind that what we cover is not meant to be financial advisement. You should take what we cover from an educational perspective to hopefully improve upon your existing trading strategy or begin to build, if you're new to everything, your strategies as you get going. So fundamental news, fundamental analysis is two main parts, and we always look at both to see what's happening in the fundamental arena before we get on the charts to try and find entry points that could potentially bring nice profits. So when we're looking at fundamental analysis, one main type would be regularly scheduled events. These are announcements such as GDP numbers, factory production numbers, PMI, numbers that we know exactly what day and what time the announcement will be, what the topic is, very predictable in that regard. Many times they'll list the expected result even in terms of comparing it to the last announcement and what's expected this time. And so that type of fundamental news is a bit more predictable, or a lot more predictable, I might say, in terms of the timing and the topic. What the exact results will be, that isn't necessarily as predictable. Now, the other type of fundamental news would be what we might call extraordinary economic events. And this sort of thing is much less predictable in terms of the timing and the topic. For example, news broke again today on US-China or even late last night and has driven the markets all day today. And that wasn't scheduled. There wasn't an economic announcement that said, hey, there's going to be a new story breaking on US-China trade negotiations. It's something that we've come to expect, the unexpected, right? Especially with US-China trade negotiations, and less so now, but was quite a bit the Brexit situation in past months, where we just didn't know what might be the next thing to break. But you can plan for that within your trading strategy, plan for the unknown, because you might know that something will happen, especially with those types of stories going, those types of economic situations happening. You can expect that something might happen unexpectedly, unscheduled. And so even that type of fundamental news, the extraordinary economic events, is something that you certainly can plan for a bit differently than the regularly scheduled economic announcements, but you can still plan for them. And we'll talk about that as we go over some ideas on my demo account. Okay, so before we get to the trading account, let's take a look at what we see in the fundamental news today. And so you can quickly get an idea of the headwinds, which way the sentiment is going, just by looking at the headlines and seeing what colors you see on the futures and other assets that you look at. And this, you could have looked at this hours ago. I'll give you that heads up now. This information has been there all day. Okay, it's nothing new. It still can be helpful for future decisions. Had you looked at it hours ago, you could have already made some decisions, which clearly could have been very profitable. Okay, so S&P 500, NASDAQ hit new highs as chips rally on trade optimism. Okay, so U.S. markets open now. The actual market's rising. Well, the futures have been rising all day, right? Okay, it was something you could have been taking advantage of on the NASDAQ, S&P 500, Dow Jones. The indices become very predictable when you have big driving economic stories fundamentally. Okay, and so what's great is with us, you're trading on the futures. You don't have to wait for the US markets to open to trade on that news. You can trade as soon as the markets open late Sunday night, early Monday morning. You can start trading clear through the week. Okay, these assets are going all week long. So S&P 500, NASDAQ, they didn't mention Dow Jones, but it also was climbing, and not just US indices. We'll take a look. Some other indices around the world also took a jump up. Before I move forward, what was the reason for this? Why have the markets been so happy today? Happy if you're buying, I guess, not if you were selling. Was it Brexit? Was it US China? Yeah, it's pretty obvious, huh? It's right there. Trade optimism. They're talking about US China trade optimism. Okay. And if we look at another news source, why look at just one place? We take a look at Reuters. Top headline, China and US moving closer to trade deal, but no agreement on tariff rollbacks. Sounds like good news, moving closer to a trade deal. S&P 500, NASDAQ hit new highs as chips rally on trade optimism. Again, positive headline. Okay, this is creating a positive sentiment type situation. And these articles have been out all day, like I said. This is nothing new today. Had we had an earlier webinar, you could have acted on it sooner if you didn't see it and know about it. So what do we see here, green or red? What does that mean if all of these are green? Is that good news for the markets or bad? Depending on your perspective, correct. Yeah, looks like good news. Uh, some of you seem non-responsive. Can you type okay if you're still hearing me all right? All right, looks like we're still good to go. Okay, so yeah, these are all green. What does that mean? The futures, the actual market when they opened, everything's green, except for one, the VIX index. What's the VIX? Why would that be down when there's economic optimism and everything's moving green? Why is this one S&P 500 VIX red? Why is it dropping? What does the VIX measure? Yeah, correct. Fear. It's the fear index. It's the slang name for it, the common name for it. The VIX index is the fear index. Why is the fear index dropping today? Because there's economic optimism about US China trade negotiations, right? Without even looking, what do you think gold is doing today? What do you think gold has done and might continue to do? Yeah, down, right? If there's less fear in the markets and people are buying into the riskier assets like indices and stocks and these other maybe some currencies, what would happen to gold? Well, safe havens tend to go down when people think the markets are good to invest into. Okay? People tend to run to gold when there's fear. The fear index is dropping, probably so is gold, right? So we get a quick read of the markets, a lot of optimism, a lot of positive sentiment. Some of the indices hitting new highs. And by the way, indices are tremendous to trade on. When you have big driving stories like US China trade negotiations, because they're built basically to mimic the entire economy with dozens or hundreds of companies within one index, they tend to be pretty easy to read. Okay, you're not always going to read them right, but they tend to be quite predictable, and the profit potential is large on them as well because they can move hundreds of points in short periods of time. So with that said, let's go to the charts then. We've got an idea of the fundamental news. This is gold. What happened here? Friday's close. Friday's close. That's the 22nd. Sunday/Monday's open. Okay. Did gold gap up or gap down? You should see that the price gapped, meaning it opened at a much different price than it closed Friday when the markets opened after the weekend. The price gapped down. Right. So do you think that's a sign of what might happen through the day if an asset gaps at the opening? Look what happened. Yeah, many times there are traders that will trade on a gapping strategy coming out of a weekend. The gap represents momentum from whatever happened through the weekend. And what happened was, as we broke into the opening of today, good news about US China. Okay, it was there all day. How do you confirm that it was good news for the markets? Well, gold gapped down. Gold gapped down. The price opened much lower at 1459, 1460 compared to its close, 1462 plus on Friday. So it gapped down. Okay. If there was bad news for the markets over the weekend, it likely would have gapped up. Okay. Now, as happens many times, what does it mean when I say the market filled the gap? What does that mean? The market filled the gap. I'm showing you a strategy that can be paired, the technical analysis can be paired with the fundamental news, and many times it works quite well. The movement filled the gap after the market opened. Yeah, it retraced, right? It retraced back up. So the gap was down. If you were awake at that time, many traders will trade for the market to retrace the gap. And you see what happened. It went back up. And where did it stop climbing? It stopped climbing around the location where it gapped down from. Okay? Right about, and actually I could come up a little higher. It's a little more perfect than I drew it. Okay? This was the close on Friday right here. Where did it retrace back up to after it gapped down? It went up the full $2, right back to where it gapped down from on Friday. Okay, that's called a retracement of the gap, filling the gap. Okay, now once that happened, which way do you know the momentum likely will go? In the direction of the gap, correct. Correct. Not always. Certainly not always. We said from the beginning, no strategy is going to be right every time. There's risk in trading, but this isn't about trying to be right every time. It's about trying to be right enough to profit, right? So if you expected this retracement, you would have profited. You could have traded on it. You would have known exactly where to get out, okay? Right before it got to the spot where it gapped down from, you could have gotten out and taken that profit. You know, a one lot position on gold would be 100 ounces. You could have made like $200 on that little retracement back up. A nice little scalp move. Okay, scalping's nice with these strategies. Now, why would I have chosen maybe to trade down from this resistance level? Okay, this being the old support. It gapped down, it pulled back up, and it started to go sideways and consolidate. Why would I choose maybe to trade down today from that resistance? Because of the fundamental news, right? We see it gap down. That shows a sign of momentum in that direction. Okay, it comes back up. It respects that level where it gapped down from after it fills the gap and starts the downtrend again. We look at the news reports and we see, ooh, good news, US China closer to an agreement. What do you think would happen to gold? It's like having a checklist of reasons why you might sell on gold today. At market open, it gapped down. After it retraced back up, it respected the resistance and started to downtrend again. Also, you look at the headlines and you see good news for the markets. You see futures in the green. And you think, safe haven probably should drop with all of that information. That's how you use fundamental news to help you decide what direction might be better to trade. And again, it's not right every time. Today, you see, you'd have been dead on. You could have made a huge profit. Following the fundamental news that we looked at, seeing those articles breaking, even starting late last night into this morning, seeing the fundamental news, seeing the gap indicating momentum down, seeing this resistance level holding after it filled the gap and the big plunge here to a new low point for the day, that confirms a downtrend. Even if you didn't get in until it dropped below this little level here, you still would be in profit right now. You don't have to have a perfect entry point to profit. You can be patient and wait and see that the downtrend continued and then went with it. Why were you looking for the downtrend? Again, the fundamental news was driving you in that direction on gold. Type OK if you're with me on that. How you could have used the gap to confirm momentum potentially in that direction, use the fundamental news to reconfirm that direction, and then use your technical analysis to have proper entry points. Okay, pretty simple. These were easy profits today on gold. Really were easy profits. Everything went how you would have expected it to go. So as gold was dropping, what was happening to the more riskier assets? The more risky assets, I should say. Like S&P 500. Look at that. And again, if you used the gapping strategy, did the S&P 500 gap up at market open today? Did the S&P 500 gap up? It did, didn't it? Here's Friday's close. Here's Friday's close, right? Closed around 31.11. Okay. Market opened today up here. Okay. Market opened up here. All right. It gapped up to 31.18 almost from 31.11. So it gapped up 7 full points from Friday's close to today's open. Okay. As soon as you saw that, you could have said, ooh, I better check the articles. Something's going on. You check gold, you see it gap down. You check the indices, you see they gapped up. And you say, some kind of positive sentiment's happening today. It wasn't just one asset. Gold gapped down, silver gapped down, the safe haven metals, right? We look and we see S&P 500 gapped up. You look and you see Dow Jones gapped up, okay? Gapped up and kept climbing. We see NASDAQ gapped up, okay? Opened higher than it closed on Friday. So something was going on. Something huge was happening in the markets. Everything that when there's good positive momentum that gaps up, it gapped up. Everything that would gap down when there's good positive momentum, like the safe havens, gapped down. So you could have easily read, hey, there's something going on here, right? Now, if you traded to fill the gap here, you lost, right? If you traded down to fill the gap, that one was a loser. No problem. Soon as you saw that it formed a support level, okay, you see the support, 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 support. Now you know it's not filling the gap. It established a solid support level. Now you could say, okay, there's positive momentum today. Gold is dropping. Indices gapped up, formed a support level. The same reason why you might have been thinking gold would continue to drop from the resistance level is the same reason why you might have thought the indices would go up from the support level. Okay, so we were wrong on the gapping here. We were right on the gapping back up on gold. Okay, we made more on the gold gapping up than we lost on this gapping down because you'd have a simple stop loss right up here. No problem. You're still in profit on those two moves. Now, this goes sideways. What could I have done? Let me get rid of this line. What strategy could I have used? Okay, I see it's going sideways. Resistance, support, resistance, support, resistance, support. What kind of order could I have put in? A pending order that if it broke the resistance to buy, and you prepare the buy stop or buy limit, which is it? What will buy from a higher point? pending order, program it that if it goes up to a certain point, buy. I'll show you how to do it. Okay. Instead of market execution, we go to pending order. Yeah, it's a buy stop. Lucian, very good. Buy stop would buy from a higher point. Okay. And you put the at price at the spot that you would want to enter. Okay. Why would I have chosen to put a buy stop up here, meaning if it breaks this resistance, to buy? Why did I prefer to prepare a buy stop instead of a sell stop down here? Why wasn't I preparing to sell if it breaks the support? By the way, you could have done both. You wouldn't have lost anything by preparing the sell stop. And we'll talk about that in a minute. Why would I have known that I probably want to prepare a buy stop on this resistance level? What kind of news are we talking about today? Fundamentally, it would be logical. Exactly. Very good. Fundamentally, the news was telling us, hey, it's good news for the markets. And you're getting confirmation from gold dropping, right? You're getting confirmation from the safe havens retreating. And so you would be waiting for this to break through. And typically when a resistance level gets broken through and when it has fundamental news behind it, you get a large, what we call breakthrough candle. And that's what this was. A breakthrough candle is typically larger than most of the prior candles. So it was stuck between this, ranging between this small level up and down. And then you get the breakthrough candle right here. Your buy stop could have entered somewhere around, say, 83.23, and you could be sitting at a profit at 83.65 right now. You know, a one lot position is 100 indices. That rise from 83.23 to 83.65, that's like $40 rise or so, a little more, in a short period of time. If you had 100 indices and it went up $40, right? 100 times 4 is 400. 100 times 40 is 4,000. $4,000 potential profit right here, just from a simple buy stop if you had enough in your account for a one lot position. And you don't have to trade one lot. You can trade whatever size you want. Trade 0.1. You'd have made 400. Right? Trade a micro lot, 0.01. You still can make $40 on this little rise right here. It's not little, it's a large rise. But in this short period of time, even on a micro lot, you could have made $40. Okay? 0.01, the smallest trade size possible. So this is the power of an indice because there's large potential movement, but the predictability is there. Huge potential profit with high predictability based on the fundamental news and a proper technical analysis entry point. Okay? Very simple breakthrough strategy. Going with the fundamental news. Where would your stop loss be, by the way, if you like to trade with a stop loss? If this was your entry point to buy as it broke through, where would be a logical spot that I would have put my stop loss once I was in on that buy move? If you're trading with a stop loss, not everybody does. Yeah, exactly. Many of you are already saying back below the support, back below the support level. So if you got in on a buy here with your buy stop, you would have programmed the stop loss maybe to be back below the support down here. That way, if it didn't continue to climb and it reversed back down, you could get out with a small risk, with a small potential loss. Okay, so very easy strategy, very easy breakthrough strategy. Now, by the way, I alluded to the fact that you could have also put a sell stop down here. Why might I have also put a sell stop below this support? Just in case what happened. Remember, we talked about the unpredictability of fundamental news sometimes. Just in case what happened, you could have had a sell stop below this support. Yeah, exactly. What if the breaking news came out the opposite? What if Trump tweeted, no deal? I won't roll back tariffs and no deal. And it was bad news all of a sudden broke. What do you think would have happened with this movement It could have reversed, broke this support, and came plunging down. Yeah, sudden bad news could come out anytime, right? So you're preparing for what you know, the buy stop. You're also preparing potentially for what you don't know, the sell stop below the support. Which one did you believe would happen more? The buy stop, because you knew that information already. But just in case, you back yourself up with the sell stop potentially. Okay, so in trading, you don't have to be right necessarily. You just have to be smart. Okay, so in this case, you could have thought it would go up. Some news breaks that's the opposite of what you thought was going to happen, and it goes down and you still profit. You take the small loss on the stop loss if this already opened, and boom, you can profit still in the opposite direction, even though it was the opposite of what you thought would happen. I've seen that work many times. Okay, doesn't always work. It could go down, trigger that one, then come back up, right? But that's how trading goes. Nothing's for sure. But for sure, today, had you done this, you'd have had a huge potential profit. Okay, on an easy breakthrough. You see, once this broke, it didn't come back. It's not like it came back and would have hit your stop loss and then went back up again. It was like a sure thing. Boom, it broke through and kept running. All green, 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 green until it got way up here. Then you see some wicks on those 15-minute candles. Okay, so very easy to read. If we look at Dow Jones, it was the same. You could have followed the same strategy. DAX 30, same thing. Okay, the DAX actually retraced the gap some before it went up, but still up tremendously on the day, up from where it first gapped up to. Still higher than where it was. Okay, FTSE, same thing. Looks like it's still trying to climb. Okay, so this US-China stuff isn't just affecting US markets. It's also positive for the world. US and China are the two biggest economies in the world. And so good news for both of them is good news globally for lots of markets. Okay, not just US and China. CAC 40, that looks like a false candle. I don't know what that was about, but we see the gap up and the climbing. That was a tricky move there. I think that's a false candle. And even, the Nikkei gapped up, kept climbing. Okay. Very, very easy strategies here. Breakthrough strategies even would have worked here. Okay. Resistance, resistance, breakthrough, and up it goes. Okay. Not as dramatic as the US indices, but still not bad. Okay. So gold, we see still continuing a downtrend as we've been talking about it. Okay, look at the US dollar. Why would the US dollar be climbing so well against the yen? Good news for the US China. I can understand why the US dollar would strengthen. Why would that have been good to pair against the yen? Fundamentally, what happens with the yen with good news? What's it behave like? The yen behaves like, starts with a G, gold. Yeah, the yen is a safe haven currency. The yen is a safe haven currency. So when gold is weakening, many times you'll see that the yen is also weakening. And so if we expected gold to weaken and viewed it on the chart, and we have reason then for the yen to weaken, and we obviously had reason for the USD to strengthen if it had good news for US China. So I always try to use the analogy of pairing a strong horse against a weak horse, meaning if the USD had reason to strengthen and the yen has reason to weaken, it makes sense to pair those against each other. It makes the decision easier as to which way the movement would likely go. And you see how easy that would have worked today. You could have been using a breakthrough strategy all day. Here was the gap up. Here's the gap up. Here it refilled the gap. By the way, this would have worked on this asset. Refilled the gap back down. And then after it refilled the gap, immediately went back up. Once it refilled the gap, there it went with the optimism. Okay. And so once it refilled the gap, if you bought up, you're in huge profit. If you're looking for breakthroughs, it broke through this resistance level here and kept climbing. It broke through this resistance level and kept climbing. It broke through this resistance level, resistance, 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 and kept climbing. Okay, so gap, refilled the gap, uptrend, broke this resistance level, a buy stop would have worked here, formed resistance, resistance, broke through that resistance level, a buy stop would have worked there, resistance, resistance, broke through that resistance level, buy stop could have worked again. The Swiss franc used to be, and some would still say is, a safe haven, but a while back, a few years back, there was a big event dealing with the euro and Switzerland, and all of a sudden, the Swiss franc was a mess, and what was a safe haven turned into something crazy. And now the Swiss franc still does behave somewhat like a safe haven, but many have started to prefer gold and the Japanese yen over the Swiss franc. But you'll see, we can look at the Swiss franc. Let's pull it up. USD CHF, let's find it. And you see, not as quite of a good climb, is it? Just as we were saying. Yes, it went up. Okay, USD went up against the Swiss franc recently. But what happened today against the Swiss franc? Really, it went sideways, didn't it? Sideways against the Swiss franc. So the Swiss franc didn't weaken like the yen, and so, or like gold. So we can see a big difference between the Swiss franc and the yen when it comes to the idea of being a safe haven. And so it really does date back to just a few years ago when there was a huge event that happened that really spooked people from the Swiss franc. And it's not been the same safe haven asset since then when you look at the movements on the charts compared to gold and the yen. Very good question and a very good point. Okay, so we still have potential opportunities then with a downtrend showing strong on gold with S&P 500 and NASDAQ and Dow Jones and many other indices reaching new highs. Okay, or nearly reaching new highs. If we go to 30-minute candles, I see a double wick up here. Okay, you see a double wick, resistance, resistance. If you believe there could be a pullback, you got a nice resistance level here on the 30-minute candles. We can see it better if we go to 5-minute. Okay, 5-minute candles, resistance, came down, resistance, dropping again. You could take a shot at a pullback because after all, they didn't have a deal yet, right? Optimism about a deal isn't the same as having a deal. So you could bank on a potential pullback. How much would you need to risk? Well, it's up to you, but you could put your stop loss just above there, couldn't you? That's not very far distance. Stop loss just above this resistance level, and you could take a shot at a pullback, maybe taking profit down here where it already pulled down to once. If it pulls down here again, boom, you take a quick scalping profit. That's something that you can just see the resistance formed, and maybe it's due for a pullback. Okay, and so that's an opportunity potentially. What else could you do? What if it breaks through? If it breaks through this resistance, again, you could have what sitting up here ready to go. You could do both. You could sell on the pullback, and if it breaks through, have another buy stop waiting, right? Another buy stop waiting. The next resistance level, I don't see until up here. Okay, if it breaks through here, it could run up to 28,120 or so. I say could. Doesn't mean it will, but certainly the potential's there. We see what happened right back here. Okay, support, support, support. This becomes resistance. If it breaks through, potentially there could be a large climb. So you could sell on this pullback, which it's already dropped more since we talked about it, and you could also prepare for a breakthrough in case it's wrong. Okay, so I see some huge potential for movement without even having to predict the direction right now. Okay, you could take a shot really in a couple different directions on each asset. Prepare for a reversal or prepare for a breakthrough and trade on reversals if you wanted to. A lot of opportunities. And by the way, what do you think happened to copper? We'll end on this, I think. Copper's used in industry, right? Copper is used in industry. Okay, if we go to 30-minute candles, copper gapped up today. Gold gapped down, copper gapped up. Now it did pull back down, but you had an opportunity when it climbed. Copper many times when there's optimism in the markets, it doesn't behave like a safe haven metal. It behaves like an industry metal. So you had a quick jump up in the price of copper because copper is used in electric wiring, used a lot when the economy is doing well. So if there's optimism about the economy, as gold's dropping, a lot of times copper goes up. Now you see it reversed itself. Is this a sign? Copper reversed itself from the day's high. All of a sudden, it reversed itself back down. Doesn't that show that really there's some optimism left in the markets? You could use that as a signal that maybe the rest of the markets could pull back because copper climbs when there's good news. It drops when there's bad news typically, right? Copper pulled back already. What does that tell you might happen to something like the Dow Jones? Right? Sometimes you look for little signals from other assets. And if copper's dropping, that's a sign that people really don't think industry and expansion is that likely right now. And if that's the mood after the big climb on copper, which we saw, it gapped up and climbed to a high, and it's dropped already, what might happen here? We're starting to see what might happen here, right? So that's something to keep in mind. Copper sometimes can be a leading indicator to what might happen on the indices. Okay? Just as gold was a leading indicator as to what might happen on the indices today. You can look at both. And if we look at gold, okay, gold's kind of consolidated a bit. Okay, starting to move sideways, starting to form a support level here on the 15-minute candles. So that momentum, that positive momentum, looks like maybe it's died a bit. Doesn't mean it's done, but it looks like it's died out a bit. Just kind of perusing the assets to see that technically on the charts. I think this is a good place to stop. You might look at the charts. If you like the idea of the potential for some pullback on all this movement that occurred today, some reversals, you could take a shot at that while also preparing for breakthroughs, for continued movement in the optimistic direction that was running today. But it looks like maybe some pullbacks are beginning. We can see the resistance levels forming on the indices and some downward movement. And we saw already a reversal on copper, which usually is a sign as copper's dropping that maybe the economic optimism has faded a bit. Okay. All right. Any questions before we end things? Okay, Lucian, what's your question? You typed yes, but I don't see a question. What time frame is best to trade on? It depends what style of trader you are, right? If you're going to do small scalping movements, then I'm looking at 5-minute candles, 15-minute candles, maybe 30-minute. If I'm doing longer term moves, then maybe I'm looking at 4-hour candles, 1-day candles, even 1-week candles. So it depends on your goal, what your objective is, how quick you want to get in and out of the markets. Okay, and it's always a good idea, even if you're scalping, you can look at the bigger candles as well to get an idea of the bigger picture before you zoom in on your small moves, and vice versa. Even if you're trading the big picture, you still could look at the smaller candles to get an idea more exact of what entry point you want as you get in for a longer term move. So it's called taking an outside in or an inside out look. Look at as much information as possible before you start trading. Okay. All right. Thank you, everybody, for joining. Thanks for the good questions. It really helps bring up information maybe that I wasn't intending to cover, but it's helpful for others. And I hope to see you tomorrow and Wednesday. We've got more webinars going this week. And if not, then to see you back evening time next Monday would be great as well. Okay. All right. Bye for now.